markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from London. I'm Sandra Kilhoff with this Bloomberg Business Flash. Now, most markets are closed for International Labour Day, so volumes are fairly low, but we are seeing the Stock 600 trading and down 0.7%. The FTSE sliding 2.6% here in London. It follows a down day for Japanese and Australian equities, the two benchmarks that were trading in Asia earlier this morning. And it comes after some sobering comments from some of the tech giants like Apple and Amazon about the coronavirus impact going ahead. Just this morning, we've heard from some major European companies, Ryanair, for instance, announcing job cuts and a loss in the first quarter. So currently down 4.9% in London trading. On the other hand, RBS, quite interestingly, actually reporting a beat in the first quarter. And despite the fact that they're seeing higher impairments, the stock is up 2.3% here in London. So investors taking heart from the fact that those earnings seem to be fairly well capitalized. Now, the risk-off tone is pushing Treasury yields down further today, down 4 basis points to 59 basis points at the moment. Not seeing any trading when it comes to bund or gilt yields. But if we take a look at Aussie yields, they did close down 2 basis points this morning. Now, the greenback is bid up 0.3%. We are seeing dollar yen slightly higher, 107 spot 1. Sterling down 0.3% at 125. The euro at 109. Generally, G10 currencies are weaker on that dollar strength. Aussie and Kiwi dollars falling quite a bit. The Aussie down 0.9%. But I'm also keeping a close eye on the offshore yuan, which has plunged 1% after some poor data from Japan and South Korea this morning showcased the pandemic impact. Meanwhile, oil is headed for its first weekly gain in a month. Production cuts are taking effect today, so WTI up 1.4% at $19 a barrel. That's a Bloomberg Business Flash. Now here's Ian Garens with more on what's going on around the world.
Sandra, thank you. Western Europe is seeing the rate of new coronavirus cases decline, with several nations preparing to ease restrictions. Deaths in France rose at the slowest pace in 4 days, with fewer than 300 fatalities for the second time this month. France plans to begin easing its lockdown from the 11th of May. Now, here in the UK, a study has found virus deaths among black and other ethnic minority groups are disproportionately high. The Institute for Fiscal Studies also suggests they are more likely to be financially impacted by the outbreak, with a higher proportion in jobs affected by the lockdown. And finally, Bill Gates says a virus vaccine could take as little as 9 months, but he also warned it could take as long as 2 years. His foundation is focusing its efforts on fighting the coronavirus. He says he does not think life will return to normal until there is a viable vaccine that can stop the virus spread. Global news 24 hours a day, on air and on QuickTake by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Naira.
Leanne, thank you so much. Now let's turn back to tech and Apple reporting revenue that beat estimates. iPhone sales were down, but not nearly as bad as some feared, yet the company won't give a second quarter forecast amid the uncertainty in markets. Meanwhile, Twitter and Amazon shares both fell in late trading after issuing their earnings. For more, we're joined by Bloomberg Intelligence tech analyst Matt Bloxham. Yeah, it's really stolen the attention, Matt, that Apple has skipped this forecast for the first time in about a decade. But I want to kick off with Amazon, because Jeff Bezos said the virus outbreak is the hardest time we've ever faced. And Amazon basically said, look, we might incur a loss in the current quarter because of the increase in spending due to the pandemic. Now, previously, Matt, investors have often looked through Amazon spending on the hope of future growth. Are they going to do that this time?
Yeah, hi Nara. I think they will. I think the key thing here is that Amazon is doing this from a position of strength. That they're choosing to make this huge investment in their staff and their infrastructure so they can keep on delivering a great service to customers. So they would have made about $4 billion in the second quarter, and they're going to reinvest all of that, possibly more, into extra pay and extra safety measures for their staff. I think they've bought something like 100 million face masks, for example. So, I think they've always played a very long-term game. I think they continue to. I think it's one of the few companies that through the lockdown has boosted its reputation. I think everybody had a great perspective on Amazon anyway, but the fact that they've continued to deliver pretty much everything, on kind of short time scales through this pandemic, I think has kind of, strengthened their grip on how we buy things for the future.
Matt, what about Apple, though? Because that line that they're not going to predict the future, in effect, has rather thrown people in a way. I mean, is more being read into it than should be?
Maybe a little bit. I mean, I think there's a couple of things that you can take from what they did. I mean, they added $50 billion to their buyback program and they increased the dividends. So I think that's an incredible message that they feel very confident about the future. And on the call, they also gave some steers about directional trends in Q2. So they didn't give a specific number, but they told people what to expect. So iPhone, their biggest revenue source by far, generated almost $30 billion. Of their $58 billion of revenue in Q1. That was down about 7% in that first quarter. They said it's going to get worse in Q2, similar for wearables. But on the flip side, iPad and Mac, the PC platform is going to go up. So I think they gave some figures for analysts to play around with. And I think when you look at Apple's revenue, the December quarter is about 30 to 40% bigger in revenue terms than the other quarters. So and that's when they should get their new 5G handset out before the end of the year, despite disruptions to supply chain. So I think when you look beyond the immediate short term, then it's still looking pretty encouraging for them.
Yeah, I think one thing that's come out of the tech earnings season, Matt, is actually there's been some surprises in terms of the impact of the pandemic, but also in terms of investors' reaction. So Twitter falling sharply in aftermarket, but why was the market so surprised about the squeeze on advertising sales?
Yeah, it's a good question. I'm not sure what else. I mean, we've seen this across Facebook and Google as well. There's been a huge amount of surveys out there saying that advertising is down 30 to 40%, particularly in Q2, and it's affecting both traditional and digital advertising. So it was a little bit surprised that people took that so badly. I mean, I think Twitter historically has struggled to monetize its platform anyway, and I think them, along with most other ad-funded tech platforms, this is the first time they're having to go through some kind of cyclical pressure. It's just been a structural growth opportunity for them. So I think a lot of these companies are having to rethink their platforms and their strategy for advertising.
All right, Matt, thanks very much indeed. That was Bloomberg Intelligence tech analyst Matt Bloxham talking about tech results. Coming up, we're going to hear from Ryanair CEO Michael O'Leary. How's the London market at least looking today, Nara?
This is a Bloomberg Money Minute. Wall Street has a tough act to follow as the new month begins. April saw the best gain for the S&P 500 since 1987, nearly 13%. The Dow was up 11%. The Nasdaq jumped 15.5%. There's lots of earnings news to digest, with a barrage of results coming out after last night's close. Apple squeezed a 1% gain in revenue out of its pandemic-ravaged quarter. CEO Tim Cook saw a pickup in late April and said some U.S. stores could reopen this month. Amazon saw profit shrink in the first quarter and said it may post a loss in the second. And Visa said it will be challenged for a number of quarters, even as spending declines on its network begin to moderate. Unable to reach an agreement with its lenders, J.Crew reportedly is preparing to file for bankruptcy. It had planned to pay down part of its debt by taking its Madewell division public. That plan was scrapped in March. Larry Kofsky, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Are you one of those people who thinks it's okay to drive stoned? I mean, what's the worst that can happen? You end up driving below the speed limit? It's no big deal, right? Wrong. The truth is, your reaction times slow way down when you're high. You not only put yourself in danger, but everyone around you. Talk about a buzzkill. Stop kidding yourself. It's not okay to drive high. If you've been using marijuana in any form, do not get behind the wheel. If you feel different, you drive different. Drive high, get a DUI. Paid for by NHTSA.
Hey y'all, Jeff Foxworthy here.
If you want to do something important, work in adult social care.
I'm Georgia. I love social care because you never know what each day will bring.
The thing that I would say to anybody that was thinking about a job in social care is go for it.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Another day inside? I've turned my place into a gymnasium. I'm using the stairs for lunging and the washing machine as a power plate. But if you'd rather shed pounds off your outgoings, take a few minutes to check your bank account for any unwanted direct debits. It's just another small step towards money calm. Money Supermarket.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, to the 5, touchdown! Search classic game replays to listen for free. It's TuneIn Sports on this day. On this day, 1920, legendary slugger Babe Ruth smashes his 50th Major League career home run. His first for the New York Yankees in a 6-0 win over the Boston Red Sox.
Watching fans as he swings around the bases. You're watching Diamond History. This was Babe Ruth, Mr. Baseball.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Live to London on DAB Digital Radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
8:30 a.m. in London, 9:30 if you're listening in Paris, Frankfurt or Brussels. Good morning, everyone. I'm Naira Chehich.
And I'm Roger Hearing, and you're listening to Bloomberg Daybreak Europe.
Roger, lots to digest on this Friday morning in markets. 30 minutes into the equity market open in Europe, even though, of course, we had another painful initial jobless claims number that came in worse than expected. And we've had a lot of news overnight in terms of tech from Amazon and Apple really sending warning shots. The reaction, we've got to take it with a pinch of salt in general because there's thin trading, given that so many markets are closed in Asia, in Europe, just globally overall. And we are heading for the best month, or I should say we had, because we're in May now, of course. We had the best month in April for the S&P 500 since 1987. Global equities, best month in a decade. But we have red on the screen today. The FTSE 100 down 2.25 percentage points. You are seeing the Stock 600 about 0.6% down as well. But again, most markets in Europe are closed. And the US, down day yesterday. Futures point to another day of losses. S&P, E-minis, NASDAQ and Dow futures all down more than 2%. And the risk-off is being reflected a little bit across assets because the 10-year Treasury yield is down 4 basis points. We're just below a 60 handle. Of course, European bond markets closed. The 10-year gilt yield absolutely dead steady. The fact you're seeing dollar strength as well across G10 really signals as well that there's a little bit of a risk-off tone in these markets. But oil has been a little bit of the outlier here. We're seeing WTI up almost 2% above $19 a barrel. Brent at $26.50, pretty much flat now, so giving up some of the gains. But oil actually heading for its first weekly gain in a month. We're going to see Friday OPEC Plus's output cuts beginning, and WTI's up about 13% for the week, despite some of the ructions that we've had in the oil market. Roger.
Right, well, let's pick up on some of our top stories. Now, Boris Johnson says the UK's past the peak of the disease and it's on a downward slope. Bloomberg's Charles Capel has the latest from Downing Street.
Johnson promised to lay out a roadmap to exiting the coronavirus crisis next week, setting out how the UK can get the economy moving again, people back to work and children back to school. The Prime Minister said he wants to encourage the economy to bounce back, but said he does not expect austerity to be a part of the post-crisis response. The economic policy response to the pandemic has already cost more than £100 billion this financial year, the government's budget watchdog said. Charles Cable, Bloomberg Daybreak Europe.
And in earnings news this morning, Amazon CEO Jeff Bezos normally uses the company's earnings report to extol the virtues of Alexa or the benefits of Prime. But on Thursday, he told investors to hold on tight as his company navigates the hardest time we've ever faced. The largest US online retailer saw profit shrink and said it may incur a loss in the current quarter as it boosts spending to keep logistics operations running smoothly during the coronavirus pandemic.
Meanwhile, Apple didn't provide a forecast for the first time in more than a decade. It's sparking concern that performance will suffer later this year. It sent shares down in extended trading despite the tech giant reporting a 1% rise in quarterly revenue. A strong online performance also saw retail sales hit a quarterly record.
Amazon shares also plunged post-market, but meanwhile, Gilead Sciences may spend $1 billion on its new treatment for COVID-19 this year alone. But how much revenue can it generate? On the company's earnings call, Gilead said it was too early to discuss the potential outlook. It's giving away the first 1.5 million vials of the drug. For the future, it plans a sustainable model for patients and shareholders.
Now, airlines are bearing the brunt of the virus impact, with Ryanair this morning reporting a €100 million loss in the first quarter. The low-cost carrier also announced 3,000 job cuts and said it could take at least 2 years for passenger demand to reach 2019 levels. The Ryanair CEO, Michael O'Leary, spoke to Bloomberg's Matt Miller and Anna Edwards, and they asked him how the airline can bounce back from this crisis.
We currently employ about 18,000 people, so today we're announcing cuts of about, just over 15%. We're going to have to lose, regrettably, about 3,000, mainly pilots and cabin crew, over the next 3 or 4 months. And that's because this year we're now carrying less than 100 million passengers against an original budget of 154 million passengers. We'll be down about a third in traffic. We have almost no traffic in the June quarter. It looks like we'll lose about 100 million in the June quarter. We have never in the history of Ryanair lost money in that quarter before. So the situation is grim. We expect to be allowed by the European governments to go back to some limited flying in July, from July onwards. July, we expect to operate about 40% of our normal programme. August, maybe 60% of our normal programme. And then we're moving into the winter schedule. So I think what we're facing now is a historic decline in air traffic in Europe for the next 12, 18 months. And now I do expect that when we do fly in July, I think the traffic will be strong, but it'll be strong because the airlines, the tourist facilities, the hotels in Spain, Portugal, Italy will be discounting hugely to get people to move during what remains of the tourist season before the schools go back in September. So we think it's inevitable now. Our business is going to be about a third smaller this year. We're going to take out about 15% of our staff with deep regret, but there's nothing else we can do. And even the remaining staff, we're going to be looking for pay cuts of about 20%. And that is because the environment now in Europe has completely changed for airlines. The strong airlines going into the COVID crisis, the Ryanair, BA, the EasyJet and others, who had strong balance sheets, low-cost operation, would have expected to emerge even stronger. I now think we're going to emerge from this weaker because the people who went into it weakest, which is the legacy airlines, Air France, Lufthansa, Alitalia, have either been nationalised or are receiving extraordinary volumes. I mean, Lufthansa Group is applying for about 12 billion euros in state aid. Air France, KLM, 10 billion euros in state aid, on top of payroll support schemes. These are going to hugely distort the level playing field for aviation in Europe and airline competition in Europe for the next, I think, 3 to 5 years. We will now be competing with legacy airlines who before couldn't make money, but now have so much state aid that they can afford to lose money for the next 3 to 5 years and will do significant damage to airlines like Ryanair, EasyJet and others, the well-run airlines. So the airlines that went into this, the strongest, I think, will now emerge the weakest unless we take this kind of radical action that we've announced this morning.
Michael, do you have a strategy in place to challenge that state aid? I mean, other than, coming on Bloomberg and speaking to investors who are going to largely be free market capitalists that agree with you anyway, you're kind of preaching to the choir. How do you challenge this at the state and EU level?
Well, we've already, Matt, submitted the complaints to the European Commission. We have to file our cases with the, I think it's the ECJ or the ECJ within 2 months. We'll have it done before the end of May. But the problem is going to be it may take 6-12 months to get these state aid cases, which are clearly in breach of not just state aid but also competition rules. It'll take 12-18 months to get these overturned. And then what happens? Does anybody seriously think that the German government is going to allow Lufthansa to go bust, or that the French government is going to allow Air France to go bust? We don't. It's never yet happened in history. So I think what we simply have to do is to cut our cloth. We have to take the very painful decisions that the free markets impose on us in this crisis. We will survive, but we will survive as an airline with a lower cost base, but with much lower pricing for the next, I think, 3 to 5 years. We will be a stronger airline at the end of this, but only by taking this kind of radical but deeply painful surgery that we've announced this morning.
Ryanair CEO Michael O'Leary there speaking to Bloomberg, and the shares in London this morning down 4.46%. Let's bring in Leanne Gerrans now with all the latest global news. Leanne, you begin with what Donald Trump has been saying about China.
Yes, indeed, Roger. Good morning. Donald Trump says China may have chosen not to contain the coronavirus. The president says he has seen evidence that a lab in Wuhan was the origin, saying it's possible it got out due to a lab mistake. U.S. intelligence officials say they are still investigating the exact source, but they don't believe the virus was man-made or indeed genetically modified. China says accusations it released the virus from a lab are unfounded. Europe has recorded more than 100,000 deaths from the coronavirus outbreak as it prepares for a gradual return to business. But many leaders remain nervous about a resurgence of the disease. Italy will start easing its 2-month lockdown on Monday after reporting a record number of recoveries yesterday. Germany is reopening playgrounds, zoos, museums and churches. But Chancellor Angela Merkel's postponed a decision to relax restrictions even further. Bloomberg's Birgit Jenen reports.
Bigger moves will be evaluated at a gathering on May 6, when policymakers will have more reliable data on the impact of measures. With nearly 160,000 cases, the fourth highest in Europe, Merkel is wary to ease controls too quickly. She said the goal remains to ensure the health system can cope. In Berlin, Birgit Jenen, Bloomberg, Daybreak Europe.
Now, Australia and New Zealand are considering reopening their economies to one another once the virus is contained. Borders are currently closed, but with the outbreak in the two nations coming under control, they're turning to one another. New Zealand's Deputy Prime Minister Winston Peters kicked off the idea, and Australia's Prime Minister Scott Morrison said the National Cabinet will decide whether to ease lockdown restrictions on the 8th of May as new cases in the country remain flat. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Naira.
Leanne, thank you so much. Peter Oppenheimer of Goldman Sachs joins us next. This is Bloomberg.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Family properties and investments have been passed to the next generation, but while the business has evolved, has your accountant stayed behind? Burden Accountants and Advisors examines the latest business trends, market conditions, and industry issues to maximize your tax advantages and meet your financial goals. Let Burden use their insight to create innovative tax solutions for your family and your business. Visit burdenllp.com to get started. BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve?
If you want to do something important, work in adult social care.
I'm Greg and I lead the team at a residential care home. Supporting people to live life to the fullest. It's an amazing job to have.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now.
Another day inside? I've turned my place into a gymnasium. I'm using the stairs for lunging and the washing machine as a power plate. But if you'd rather shed pounds off your outgoings, take a few minutes to check your bank account for any unwanted direct debits. It's just another small step towards money calm. Money Supermarket.
The right time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the managing. You remember, he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. You know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search The Right Time with Bomani Jones to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn.
Hey, it's Jacoby here from Jalen Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our after show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening. Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off.
a little later on, we had Zach Goldman. And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from London. I'm Sandra Kilhoff with this Bloomberg Business Flash. Now, most markets are closed today for International Labour Day, so we are seeing fairly low trading volumes. Yet the Stock 600 is currently trading and open and down 0.7% at the moment. The FTSE falling 2.3% here in London. Follows a down day in the markets in Asia that were open, so Japanese and Australian stocks falling quite a bit as well ahead of the close there. Now, it comes after sobering comments from tech giants like Apple and Amazon about the virus impact in the long term. Just this morning, we've heard from the likes of Ryanair, who warned of job losses after a loss in the first quarter, currently down 4% here in London. RBS, on the other hand, gaining 2%. It had a profit beat in the first quarter. Investors seemingly taking a bit of heart from that. US futures pointing to a lower open. Now, that risk-off tone is pushing Treasury yields down by 4 basis points, currently trading around 60 basis points at the moment. 10-year gilt yields holding at 23 basis points this morning. The greenback is bid up 0.4%. The yen at 106.9. Sterling a bit weaker at 125. The euro holding at 109. We're seeing the Aussie dollar down more than 1%. Similarly so for the offshore yuan, plunging on the back of some poor data from Japan and South Korea. Oil headed for its first weekly gain in a month. Production cuts, of course, taking effect today. So WTI up 0.5%, just below $19 a barrel. That's a Bloomberg Business Flash. Now here's Ian Garens with more on what's going on around the world.
Sandra, thank you. Let's start here in the UK, where we should find out later whether the government has hit its target to test 100,000 people a day by the end of April. Some 80,000 more tests were conducted yesterday, a significant increase from the day before. India is set to partially relax its lockdown on Monday to revive a stalling economy. The government will ease closures in areas where no new coronavirus cases have been reported, but the decision to lift the world's biggest lockdown will not be easy for Prime Minister Narendra Modi as infections in the country surge. And finally, the world's hottest video app is exploring a new frontier. Yes, traditional telly. TikTok has been approached by independent production companies with pictures and has debated a few ideas for a show. That's according to sources. TikTok has been downloaded more than 2 billion times over the past 3 years, earning a place alongside Snapchat, Instagram and YouTube as an essential part of teenagers' daily habits. Global news 24 hours a day on air and on QuickTake by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Naira.
It's funny how trends come and go. Leanne Gerrans with the World News. Thank you so much. Now, we've just come off the S&P 500's best month since 1987. Global stocks having their best month in about a decade. But where do we go next? Where should you invest in the next market cycle? Well, who better to ask than our next guest, Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Peter, welcome to the show. Really great to have you with us, with myself and Roger this morning. We've been talking through the show about what we learned from Apple and Amazon overnight. But at Goldman, you're saying, look, move over FANGs, because in Europe, it's all about the granolas. You're talking about GlaxoSmithKline, Roche, ASML, Nestle, Novartis, Novo Nordisk, L'Oreal, LVMH, AstraZeneca, SAP, and Sanofi. What have all these stocks got in common, Peter, and why are you focusing on them in Europe?
Don't try to convince yourself. Well, I think, thank you and good morning to you all. I think that in a sense what it's showing is that the growing concentration that we've been seeing in the US market, mainly in technology, with the top 5 companies there in the S&P now around 20% of the index, is being reflected in similar ways in other markets. And in Europe, which doesn't have as much, of course, in technology, it's really being focused on strong balance sheet, quality companies with relatively visible long-term cash flows. And the companies that fit that mnemonic, granolas, are really the biggest companies in Europe. And they've gone from about 10% of market cap a decade ago after the financial crisis to around 25% today. And they do have strong balance sheets. They're relatively strong growing. They have reasonable dividend yields, certainly relative to what you can get in bonds. And it's a reflection of how, just as with the US, other markets are also changing composition. You know, if you went back 20 years, the European market with the top 10 companies were all telecoms and oil names. There was one bank. And if we look at it today, there are no banks, oil or telecoms in the top 10 companies. And even though technology is a small industry in Europe, it's actually now bigger than the oil sector and pretty close to the size of the bank sector. So these granolas really are reflecting the desire for good quality, strong balance sheet, relatively stable growing companies, which in an environment of very difficult economic conditions really makes sense.
Well, I was going to pick up on the environment on that, Peter, because what you're saying makes a lot of sense in almost all times, but particularly at the moment, isn't it just really hard to make those kind of predictions, to get a sense of the direction, take that strategic view?
Very much so. It is, because we're living in unprecedented times, and we're living in particularly in an environment where you're seeing the biggest economic downturn since the 1930s. And while hopefully that's going to be relatively limited in time, there's still strong question marks over the type of growth that we get generally economically and in terms of profits after that. One thing we do know is going to be the result of the current environment is much more debt, both in companies and in particular in governments. And higher debt is a form of borrowing from the future to support demand today, and it generally means lower growth. It doesn't mean lower growth for everything, and of course there will be some things that strategically benefit from the evolutions we're seeing in the world economy. But generally low growth and very, very low interest rates are set to continue. And that's the sort of environment where people will pay up for things that can grow and things that can pay dividends over the long run.
Peter, that point that you make about the trend of low interest rates and low nominal growth, and your strategist also saying that in the nearer term, the size of the demand shock is likely to be more deflationary, and you also do talk about low inflation in your outlook. Put that together with the huge stimulus and the backstop by central banks that a lot of the market is looking to and pricing in, and explain to me why all that doesn't necessarily mean pure multiple expansion that we were seeing back in 2019.
Look, it's a great question. And I think if you look at the last cycle and the longest bull market really in a century, from 2009 to 2020, you know, what were the characteristics of that? It was one where actually equities went up a lot, but mainly driven by valuation expansion. And that was largely a function of interest rates continually falling, and particularly long-term bond yields coming down. That's harder to imagine now when we're at these record low levels of interest rates. So we don't expect that to be a continued driver of higher valuations. That being said, we are seeing historic amounts of monetary and fiscal support, which has helped reduce the tail risks that investors perceive, and I think goes a long way to explain the strong rally that we've just seen, because it helps to bring the risk premium down. But I think to your point, if you have companies that can still grow despite this environment, which are also benefiting from these record low levels of interest rates and policy support, then I think it is feasible that their valuations go higher. And because those kinds of companies are becoming bigger in the index, it's pushing the valuation of the broader index up. So I think it is possible for valuations to be higher, and some companies go higher still. But I don't see valuation expansion as being such a big driver of returns as we were seeing in the last 10 years.
Well, Peter, you were mentioning support stimulus that's going on in Europe, obviously, and the companies you're talking about there. Aren't they going to be directly affected by what we see from the ECB and the national governments? And that is still so much in question at the moment. Again, isn't it a factor that's almost impossible to factor in?
Yeah, well, I mean, in Europe's case in particular, there are additional challenges, and we're seeing that playing out at the moment in relation to, sovereign debt spreads widening again, as generally debt levels rise very sharply, surging public deficits and the limited risk sharing at the EU level. And I think that's a particular challenge that the EU faces, or the Eurozone in particular, which is not a particular restriction in some other countries. But even so, we are seeing record amounts of support, both fiscally and monetarily. The expansion of the ECB's balance sheet is extremely dramatic, and they've loosened some of their own restrictions on the scale of purchases by specific countries, and that gives them a little bit more flexibility. And none of this, I think, is going to be easy. We're in a very, very challenging economic environment, and it's likely to remain challenging for some time. But that's all the more reason why I think investors are focusing on companies that they think can survive despite this environment, that have very strong competitive positions, that are less sensitive to economic conditions. Yeah.
Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Unfortunately, we've run out of time. Wonderful to have you with us today. Thank you so much. And Goldman does still think, actually, that in the US, tech is still likely to remain the long-term winner. A down day for the FTSE 100. So many markets closed. This is Bloomberg.
No company wants to be involved in an international...
If you want to do something important, work in adult social care.
I'm Greg and I lead the team at a residential care home. Supporting people to live life to the fullest. It's an amazing job to have.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now.
The football boots that will help her score her first hat-trick. The tech that keeps you connected. The cozy jumpers that are perfect for snuggling up together. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
External pressure is going to be an opportunity for reform in China. I think liquidity more generally across financial markets is an issue and a concern.
The Spanish banks in particular are in a much better place than they were 5 years ago.
It wouldn't be great to have a drawn-out trade conflict with the US or indeed with anybody else. But I've never been one to prophesy where sterling will be, and you're a madman if you think you can.
Bloomberg Daybreak Europe on Bloomberg Radio.
Good morning from London. I'm Caroline Hepker.
And from the Bloomberg Bureau in Berlin, I'm Matt Miller. You're listening to Daybreak Europe on London DAB Digital Radio.
So it is International Workers' Day today. So actually most of Europe, Asia, Latin America closed for that holiday. European shares, though, yesterday posting their best monthly gain since October 2015. And also the UK benchmark FTSE 100 going into a bull market. Having said that, we are lower as we start what little trading there is today on the FTSE 100. We're down by 2.4%, Matt.
Yeah, it's not been a good day for stocks in Asia, in London. Of course, the rest of Europe, as you pointed out, isn't trading, and U.S. futures also look bad, right? Down more than 2%. It's really the bleak tech earnings picture we got yesterday from what have been the leaders of the rally through April. Amazon said it may have a loss. Apple said it can't give an outlook for the first time since the great financial crisis. And as a result, we have back-to-back drops on equity indexes. The FTSE was down yesterday, is down again today. So you could see 2 days of losses after really a phenomenal April. You know, in April, the NASDAQ was up 21% and change. It was an incredible bullish month for stocks, even though we're in the middle of this sudden economic stop that's caused, 30 million people have applied for first-time jobless claims in the U.S. More than 10 million Germans are getting supported now through a state aid program to help their wages. So it's rough on the economic front, but equities have been faring very well.
Yeah, I mean, absolutely. 4 million people here in the UK furloughed, on the government scheme to keep their wages. And then, as you say, smartphone market, who's buying one right now? Global shipments have fallen at the fastest pace ever, basically, in the first quarter. So we're shut in. We're all watching